Financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody, welcome back to another live stream. Hope you guys are all doing well. Happy Friday to you. And what a week it's been, man. I'll tell you what, the big winners of this week, are the options market makers. Why do I say that? Well, because you've really had a lot of volatility in markets with not a lot of actual directional movement. What I mean by that is you really haven't had a sharp move in either direction. You've had attempts to go in both directions that have resolved in reversals. And why I say that favors the market makers so much is because if people, big players who are selling calls and selling puts this week, all of those calls and puts have not hit. Imagine if you were selling bets that the market would go up or selling bets that the market would go down, and instead of going anywhere, the market just chopped back and forth. All of those options are worthless, or at least they've lost a lot of their value and likely will expire worthless today, which is a big options expiration date, third Friday of the month. So long story short, the market has been really whipsawy all week long. I mean, even this morning, the 1 hour chart, the NASDAQ completely dropped, only to reverse here in the morning session. We'll see if it continues to reverse back towards those prior highs, or if we are, if we're going to see some follow through. I do think that here's my take on this with the NASDAQ directionally. Like, I am bullish overall, but last Friday we saw the frenzy sell-off into the close due to the weekend effect, right? A lot of people may not want to hold on to the risk that is inherently in a higher vol market. VIX is elevated. Volatility is very high across the board. Gold volatility very high. Bond volatility high. Stock market volatility high. So what happens in those high vol environments is people naturally are like, I don't want to hold over the weekend because you could get some craziness, which I don't sell out of positions just because the weekend is coming. I hold through weekends most of the time with many of my trades. But a lot of people, especially people who are like kind of short-term in nature or want to de-risk their portfolios, etc., may choose on a Friday to sell out of stuff to stay more defensively postured. Now, last weekend that took place, there was a huge reward to those who stomached the risk and held. However, that's not necessarily always the right play. There are also times where, selling on a Friday is the right move because you get, follow through on Monday. The bigger question then becomes, what is the true path of least resistance direction for things like gold, the NASDAQ, S&P, etc.? I'm going to go out on a limb and say my directional bias for the stock market, I'm not changing anything. I'm still bullish on it. I think you had a good pullback here, 50% retracement on the SPX. You've got wicks along this area. I think when you look at this price action, we have to look at this chart and say, innocent until proven guilty, right? The uptrend is still intact. And you'll see, look in the daily chart, price is reacting to this area over and over. Does that guarantee that this is going to go higher? No, but we can't assume, oh yeah, no, this thing's going to crash down. Look at the way price behaves at these areas. For now, there's clear buying. Could that change? Sure, something could change. But the S&P 500 seems to be showing extreme levels of resiliency at the current levels that we're trading at. The NASDAQ, same thing. I entered the NASDAQ on last Friday. We have retested my entry point twice. I moved my stop loss, which was initially here. I trimmed my risk. Had we followed through today, I would have closed out of the trade. And we still might. I mean, the volatility is very high. We could break down through those lows. And if we do, then short term, that would be my signal. Okay, close out of this NAS idea. But until proven otherwise, until proven guilty, I have to look at an area like the 24,300 level, and I have to say, hey, buyers are stepping up. Every time given a chance, buyers are stepping in and driving prices off of these lows. Now, to the bears' credit, you could say, well, bears are coming in and selling off the highs. But again, I would kind of default in that environment to, well, what's the bigger picture? The bigger picture is still a bull trend. So that is just the technicals, keeping things really dumbed down and simple. Yes, we had a choppy back and forth week, but this gives us a chance from a price action perspective to say, where are we finding support? Okay, this area. So I feel good about where my entry was. I wouldn't change anything about the trade that I took here. If we break through the lows, then I stop out. All good. We take a loss and we move on. And if we can rally, I'm looking for the overall big term trend to continue on the stock market. So for my NAS trade, watching, waiting, not making any rash decisions, just watching the trade. Does that make sense? I hope that broke down. In terms of the technicals, we're going to keep that really, really simple. Support is holding for now. Innocent till proven guilty. Bull trend likely to continue until proven wrong. I'm guessing your dollar Swiss long trade is stopped. Nope. No stop loss. I'm a madman. I have no stop loss in my dollar Swiss trade. It is a tiny position. It is a dollar cost averaging position, and it is really a long-term position trade. It's not a short-term day trade or swing trade. It is counter trend. It is no stop loss. It is all the things that they say you should never do in trading. But who's they and who says they get to make the rules? When it comes to currency trading, I trade it very differently than I would, the NASDAQ or gold or something like that. I trade with tiny position sizes in currencies. It's a very boring approach. I have a video on the topic. If you would like to learn my style of trading when it comes to currencies, I have a video on the topic. Maybe James, if you don't mind, if you could grab the link for anybody who would like to check out that video. We have a video that I've done on my style of trading currencies. It's incredibly boring. It's incredibly low risk, and it is not going to make you rich quick. It might never make you rich. It's so slow growth through currency trading. And it's very, very much position trading, long-term in nature, fundamentals. And again, I don't day trade or even short-term trade currencies. I really, for the most part, position trade currencies. I've done the same strategy for years. Doesn't make a lot of money, but it's very consistent. I accumulate and distribute very slowly in the currency world. And I trade it very differently than I would, like my NASDAQ trade, very different. NAS, I've got to stop on the trade, looking at trail stops, momentum. I got you, James. Hold on. If you could, I think I have the link somewhere saved. Vid links. Here it is. I got you. Dollar cost averaging video. James, if you want to grab that link and just save it for later. I reference it often because people always ask about like my FX style of trading. It is just not really what I talk about as much on YouTube because, to be completely honest, on YouTube, that style is not very interesting to people because people are more interested in like directional, short-term trading. I get it. And I do a lot of that. So I tend to talk more about that on my channel anyways. But on the FX side of things, super, super boring. And just how I like it. Speaking of currencies, the dollar index is pulling back. We hit the 618% retracement from this low, higher low, higher low. Can we get another higher low here? And is the dollar going to continue to advance higher? I still think path of least resistance for dollar index is to head back and test this 100 area and make a move to the upside. The reason I like the dollar index from a bullish perspective, let's do dollar CAD, for example. The reason I like dollar CAD bullish is because of the following. Technicals look pretty good. Institutional activity, we've seen some accumulation here recently of the dollar, relatively strong compared to what's going on in the CAD. Institutions still selling the CAD heavily. Sentiment bias, crowd is bearish on dollar CAD, which makes me more bullish. Economic growth signals have been pretty strong for the US, but neutraled out by comparison to Canada. But manufacturing PMIs and retail sales look strong for US compared to Canada. Jobs market data favors Canada. Inflation data still strong for the US dollar. So we just did a really simplified view. That's what the Edge Finder has found when looking at the dollar versus the Canadian dollar. If you have a copy of Edge Finder, you can also read the AI summary that's been generated here to better understand what the Edge Finder found. But long story short, Edge Finder still has a bullish reading on dollar CAD. And I like that quite a bit. I'm not in the trade, but would love to see a little bit of a pullback here on dollar CAD for some long setups. We've got this area longer term. We've broken out of this chop here. And I think dollar CAD has more room to continue to push higher. Hey, Nick, I've just realized that statistically gold has never had a consistent 9 bullish weeks in history. I wonder if you've seen it. I believe it. Gold is doing something else that it's never done before. I believe that the monthly RSI hit a record all-time high on like the 14 period or something like that. I saw that on social media. I thought that was interesting. Gold is the most stretched that it has ever been on the monthly chart. Pretty impressive. And you might say, well, so stretched that we should be selling it, right? Well, in 2025, I've said this as a joke, but it's actually true. In 2025, overbought readings on gold are stronger buy signals than sell signals. If you don't believe me, pull up an RSI, pull up the daily chart, and look at this. Overbought stretched was a bullish signal. Overbought, bullish signal. Bullish signal, bullish signal. Bullish signal. Like you can go through the list. Overbought readings on the RSI have been excellent buying opportunities on gold. Now, that will not be the case forever and always, and it's not a certainty, but truthfully, you look at gold prices and it's like, there's a lot of people who think they're very smart and they know where the top of gold is. But what I found out in my years of doing this is that the smartest people in the markets don't claim to know what the market's going to do next. They react to it. They follow it. They trail stops. They move with the market. They do not try to be smarter than the market and tell everybody else, hey, yeah, no, gold's going to top right here. It's going to come back here. It's going to do this. And then it's going to go back up. And it's going to too much prediction. Follow the trend. So for me, the path of least resistance for this, if I was, trading gold, I don't actually personally love the macro story for gold at this time from a US currency perspective. Like I think the dollar has upside, so I'm a little cautious on gold. But if let's just say I was bullish on gold, path of least resistance would be wait for pullbacks, join the move, don't fight it. And that has been the best thing to do with gold all year long, is to not fight it. I mean, gold has been a painful lesson for a lot of people, I'm sure, this year. And again, we don't wish that on anybody. It's just a difficult reality when it comes to trading gold this year. It has wiped out a lot of traders who have thought they were bigger and better than knowing where the market's going to go. And it's been a humbling experience for a lot of people. I've seen it in my comment section. So I again, if that's you, I'm not picking on you or trying to tease you or make you feel worse about it. But a lot of people have been very humbled by gold this year. And a lot of people who have been bullish on gold have had incredible years. 2025 has been a really good year. If you're a trend follower, it's been a very good year. What I mean by trend following is like trailing stops, letting winners run. It's also been a year where if you thought you were a trend follower, you might have doubted yourself. What I mean by that is if you thought you were riding the trend by entering here, taking profits here, you've realized true trend following is not capping your winners. Meaning, for me, the way I define that is I don't put take profits on my trades. So I've talked about the NASDAQ trade. If I'm right about the NASDAQ, I'm not going to take profits as soon as it hits resistance. If I'm right about the NASDAQ and it continues to push higher from here, as an example, let's say we break through these highs, we do this move, I'm not going to try and take profits on that move. I'm going to trail it. I'm going to follow what the market's doing, not calling that top. So Ballout's got it. He says, cap risks, not profits. When it comes to momentum trading, that is absolutely the case of how I approach it. A little different in currencies, because currencies, again, I have more of a choppy mean reversion bias. But even then, how do you, if you're not going to cap your losses quickly, how do you account for that? Absolutely tiny position sizing and still looking to get out of losing trades when your system has told you to do so. More people would be in a better place with their trading, I think, if they paid more attention to controlling their losers. You can control your losses by reducing your position size, stopping out if you use stops, sizing down when trades are going against you, etc. And just having a plan for when things go wrong. What about SPX? Talked about it earlier. Bullish till proven otherwise. We have a supportive area here. Price keeps coming down, testing these areas and finding buyers. If I look at SPX on Edge Finder, I'm a little less interested in SPX specifically than I am NASDAQ. Technicals look a little bit mixed. You know, trend has kind of gone sideways, choppy here, but seasonality still looks very good for NASDAQ, S&P, etc. So yeah, I personally prefer the NASDAQ. But generally, do we have Dow? Yeah, Dow has a bullish reading as well. What's the Dow looking like? Let's pull up US 30. Yeah, look at US 30 here. Very nice pin bar looking candle, at least so far. It's very early in the day. Stock market opens up in 10 minutes. Volatility is high. You are likely to get some movement across the board here. So we'll see what happens there. By the way, guys, if you want to try out the Edge Finder, if you're interested in that, we'll drop a link here in the chat in just a second to where you can do so. And also, if you're looking to improve in fundamentals, I know I've been saying this a lot recently, but I want to make sure I include on every live stream. We've recently started putting together some really, really solid research on fundamentals on a regular basis. So for example, we did a deep dive on gold yesterday. We talked about the British pound yesterday. We do closing bell quizzes. So all of these things, our team is putting together a ton of research about what's going on in financial markets. If you're somebody and you're like, I want to learn fundamental analysis, but I don't want to pay for a course, then we got you. It is totally free to join. You can join using the QR code. Well, there's the 30-day trial to the Edge Finder, but we'll also drop a link here in the chat to our Telegram channel. It's free to join. And I would encourage every single person, if you use Telegram, join us in there and just take a few seconds or a few minutes, I guess, each day. Read along. If you want breakdowns on what's happening today, fundamentally, join our Telegram channel. and start learning for free. There you go. QR code on the screen or click the link in the chat. Thank you, James. You got us on. You got us hooked up with the link. Appreciate you. Is there rate hike or rate cut expectations in the Edge Finder? Of course, my man. That stuff's important. Let's look at it. Interest rate projections. We've got a tool here that showcases what the forward-looking projections for interest rates are for numerous countries. So if we look at, for example, let's take Japan out for just a second. What we want to look at here is basically we're looking at the British pound, the US, and European area. Expectations for rate cuts are still very much on the table. You can see going out Q3, Q4, going into 2026, the general direction of interest rates is expected to continue to move lower. Probably a good reason as to why gold continues to rocket higher is you have central banks cutting interest rates. So we have central banks cutting interest rates. We have geopolitical uncertainty due to all the trade, dynamics, and that stuff still scaring people. However, I still, I've said this a little while. I don't know where the top is for gold. I won't be shorting it. Yada, yada, yada. I have no positions on gold. Let me just get that out of the way. I do still think there is a pullback likely coming for gold. But what I said yesterday in my video, and I will say every day until it happens, I'm not trying to call it. It could shoot higher before we get that pullback. We could pull back from here. But I think a pullback at some point is coming. And that's a very obvious statement. Eventually, everything pulls back. It's just a question of when. So if you're bullish on gold, what can you do? Well, it depends what your strategy is. But for me, let's just assume if I was bullish, I'm actually kind of cautious on prices here. Pullbacks, right? You have so much room to pull back and still be in an uptrend. That's the cautionary tale. Like, understand that the 200-day moving average is like your baseline for long-term trends. That is right now, guys, that is 23.6% away. That's $1,000 away per ounce, and you're still in an uptrend. That tells me the price is very bullish, but also very stretched. You have a lot of room to pull back and still have a healthy uptrend. Now, I don't necessarily think you're going to get $1,000 per ounce drop in gold, but I'm just saying it could theoretically drop by $800, $900 an ounce, and the long-term trend would still be up. And that would get, that would really flush out a lot of the, kind of hype chasers that are likely in gold right now. GVZ is a cool index that you can also look at. This is the gold volatility index, and gold volatility is off the charts right now. Gold volatility is super, super high. Now, if you're not familiar with volatility, in the options market, options trade based on implied volatility. Options are more expensive when the market thinks the markets are going to have big moves. So people pay, like if I told you like there's a huge thing happening tomorrow, everybody would want to go buy puts and calls on the move, right? Because there's going to be a big move. Implied volatility for gold is very, very high right now. So the market itself thinks that gold is going to have huge moves one way or the other. We don't know which way, but we're still expecting, the market is expecting huge swings. So it's a rough ride out there. I mean, people who have been short gold, again, it's been a very, very tough time. We'll see what happens with the U.S. stock market here. Here's a look at S&P 500 volatility. Volatility gapped higher here overnight. Futures market were very red, came all the way back here. S&P 500 now flat on the day. My opinion on this, I think the VIX probably pulls back a little bit further. I think we talked about this yesterday with Chris. He was on the stream. We were talking about a little bit of sentiment at play here. Let's look at the put to call ratio, see what's going on here. So we saw last Friday, the reason Friday was such a buy signal for my system, the Edge Finder, is right here. Put to call ratio jumped very high. People had very high levels of fear, bearish sentiment, took the market completely by surprise. Market dropped, and I bought that signal. Now, this is not the only reason. Put to call ratio is one of the tools that I look at, or the software looks at, in its calculation of whether something is bullish or bearish. But on Friday, we got a boost in bullishness due to the crowd panic selling, essentially. We had a lot of fear on last Friday. Will we get a similar fear type move that could present another buying opportunity? In my opinion, there's a possibility of that on Friday, or today, I should say. So we had a big spike in volatility. We've since kind of normalized. We're still in neutral territory. So watch for some extreme readings on your put to call ratio. If you have the Edge Finder, I check this thing pretty much every day just to see where we are, where the crowd sentiment is. We can also look at the investor sentiment survey, which spiked in bearishness this week. So crowd sentiment, Sluggy says, is the AAII also a contrarian signal like the put to call ratio? Yes. So I use this as a contrarian indicator. When you get people fearful, Chris and I, if you were to go back and watch the live stream from yesterday, we talked about how the crowd, we had a very sharp rise in bearishness. So the crowd got scared this past week. Chris and I both acknowledged that as, oh, that might mean we have room to the upside. Because one thing that the market loves to do, and we talk about this frequently on my channel, the market loves to play gotcha. The market loves to panic everyone and then rally, or make everyone so confident and euphoric and then drop. And it's not that it, like, the market's not necessarily a breathing, living thing per se, but what I'm talking about is when everybody runs to one side of the market, they price it really expensive or really cheap, right? And so it takes a little bit of a flare to spin things the opposite direction. That's exactly what we saw last week. On Friday, Trump terrified everybody with his post. The market sold like crazy, sold crypto. People got liquidated that were leveraged. Everybody was sort of euphoric going into that event, and everybody was caught with their pants down. Not everybody, but a lot of people were caught with their pants down in the markets. That's the old expression. A lot of people were very leveraged. A lot of people were sitting in, massive crypto positions and buying calls, and everybody was sort of, you can see it, right? Look at bullishness. We can look at the weekly sentiment, and we saw bulls were getting real confident again at the worst possible time, right near the all-time highs, and then boom, bearish sentiment kicks in because we got one little event that scared everybody. So yes, it's a contrarian signal that we use, and I look at this stuff really close. Does it guarantee the market's next move? No, and it's not particularly a perfect timing indicator either. But it's something to look at, something to add into the mix. That's, when we're looking at this stuff, if there was just one chart that I could show you that would give you the perfect directional move every day, we would just look at that every day. But there's a reason we have all this data in the software. It's so we can look at a collection of stuff. Like another key factor that we are looking at for the end of the year is 10-year average performance of the S&P 500. Typically, we see a rally into year's end. It's a very simple concept, not a guarantee, but something to add to the bucket in favor of bullishness. There's also bearish stuff that you could look into. Again, rarely do we get something that's a perfect signal, bullish or bearish. And even then, it's not a guarantee. Nothing is, because markets can change on the dime. All we do as traders is we make educated guesses and we manage risk. That's all we can do. We cannot know with certainty what the market's going to do next. And so if you were to look at the Dow or the NASDAQ, you could really point to the jobs market does not look very good. The government's shut down. We just had some small bank earnings, some regional bank earnings that look pretty scary. Like there could be some banks going under kind of thing. That story could flare up again. There's always a reason to be a bear. There's always a reason to be a bull. Our job as traders, and the job of the Edge Finder to help us with, is essentially to stack things in favor of the bullish or bearish case to build a logical trade plan with ideally creating a highly probable scenario, but also managing risk if we're wrong. That's the purpose of the Edge Finder. You can't look at all this stuff just off your top of your head. The purpose of the Edge Finder is to help us screen all this stuff and to generate ideas that have stronger conviction. Do Bitcoin? Yeah, so I stopped out of my Bitcoin trade here this morning. We are all out of Bitcoin. Did not hold like I was hoping it for. This weekly chart looks like it's potentially breaking down. Let's see if we rally back by end of day. I may rejoin the trade. You have some support here. I'll keep an eye on it. But yeah, Bitcoin trade did not work out. Stopped out on this one, looking for some sign of a rebound. But I'm not going to I'm not going to go down with the ship. If Bitcoin wants to roll over here for a little bit, that's perfectly fine. I still have the NAS trade open, the dollar trade open. So I've got plenty of other things that are working okay right now, but Bitcoin, no cigar there. So we're gonna just push on, take the stop, move on to the next one. So stock market just opened up, by the way. We'll see what we get here. Take a look at your 5-minute candle here on the S&P 500. We'll see how this plays out. Anyways, guys, if you want to, I mentioned it already, but if you want to keep up to date with fundamentals, we are sharing updates each day inside of our free to join Telegram channel. Scan the QR code that is right below my camera or click the link in the chat. In just a second, we are going to be showing or throwing over the show to our next host. Of course, it is Forex James taking over to talk markets and setups that he's seeing in this market right now. Stay tuned. He'll be taking over the stream just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, can you guys hear me? Oh, it's working. Can you guys tell me? Can you hear me? No? Hello, can you hear me? Sorry, guys. I don't know what's going on there. I'm good. Okay, sweet. You can hear me now. Anyway, apologies. Friday. So I hope everyone's still alive. Hope you're all well. Good. You can hear me. Good stuff. So as I was saying, my euro dollar trade got stopped out, unfortunately. So I told you guys I took a short yesterday. So I think, is it here? Yeah, here we go. So my initial short worked out very, very nicely. And I was attempting to basically just repeat the same setup, fib pullback, retest of previous structure, pull into a 200 moving average. Technically, the setup was fine. The Edge Finder was slightly bearish with a score of -2. So I thought, you know what, I'll take a stab. Obviously, between the two positions, it's still slightly profitable. So no big deal on that one. And the pound Swiss carry trade ended up getting stopped out as well. So it's been a bit of a rough morning for me. As I said, this trade was more based on the yield gap rather than it being a super strong economic trade or fundamental trade, which either way still lost money on it. But the loss wasn't too bad because, again, I've been holding it for almost a month at this point. So the swaps counted up quite nicely. Scaled into my S&P position. I'm now at full capacity on the S&P, so I'm not looking to add in again. If we end up coming lower on the S&P, the next move is to cut off some of these higher positions and try and bring down an average price, although I'm not looking to get into a super long-term battle with the S&P. If it starts taking a serious dip, I will just get out and call it a loss. Although the positions are very small, so it's really not a problem. And I'm paid dividends, which is quite nice. So overall, I'm quite happy on the S&P. GJ has managed to have another leg down, which is quite nice. So we've created a lower low. I'm now just looking to see if we can get this gap to fill that we had due to the Japanese Prime Minister swap over, or election, not swap over. And Pound New Zealand is fine. This one's done absolutely nothing. It's pretty much sat at entry. Again, this is another DCA trade. So nothing for me to do on New Zealand, on the New Zealand US dollar just yet. Excuse me. So I was also looking to take pound CAD. I actually just spotted this as I was about to come on stream. So we were looking at pound CAD yesterday, and the technicals are okay. It's not super great, to be honest with you. The only real thing I see here is this break and retest that we've got. We don't have a pullback into the moving averages, which is normally what I like to see. We also don't have a pull into the fib between the 0.5 and the 618 level, which is also quite a nice rule I like to have in place. But because the pound CAD has got a bullish score of 9, I am slightly tempted to maybe take a long if we can get a bullish H4 candle close, or the current candle to close bullish. But for now, just sitting out for a little while. It is Friday, and I've already taken 2 stop outs this morning. So I'm happy to just take the rest of the day and relax a little bit. EU and GU no longer interested. Yeah, no, that's the same sentiment I've got. I'm not not bearish on the euro dollar anymore. You're in the same trade, and it rejected the 778.6. Yeah, I mean, that's the thing. The problem with or I'd say the big issue that a lot of people face when using the fib is that they will end up with, and I'm not saying this is you, this is just a talking point. They will end up using, hold on, let me just save these so I don't lose them. They'll end up using all of these, and eventually they'll see the market pull into 618 or the 7 or the 382, but there's no rules here. So if you draw this on pretty much any pullback, eventually you will see it reject one of these levels, which is great. But in my opinion, that's more of just guesswork. And again, I'm not saying this is what you're doing, Max. I'm just saying, again, this is just a talking point in general. They will, if you're sat waiting for this, or you sat waiting for this, or this, or even a double top up here, you may as well just not even draw the fib and just wait for it to start showing some sort of bearish reaction, because at that point, you're basically just playing a guessing game. So when I use a fib with just the 2 levels, which is the 0.618 and the 0.5, it's very rule based. It's literally just 2 or even just 1 zone. If it doesn't pull into that zone, then there is no trade. Does that make sense? So there's a little tip for you. If you do want to use a fib, figure out which levels you want to use and stick to them. Don't have them all on there, because it's essentially like drawing up every single high and low. And, again, it just becomes more of a guessing game at that point. Gold tanking coming. That's the other thing I wanted to talk to you about. So I posted this morning, and I think it may have been mentioned on the stream yesterday, but it was maybe Chris or Nick, I'm not sure, but I've seen it on Twitter as well, so I wanted to have a look for myself. Now, there's a thing in gold where basically every time, let me see if I can find the image I was talking about. Every time we have a 9-week candle print, it's followed by a pretty severe sell-off. So here's the image. Just bear with me for a second. Put it over there. So this is the image. And again, I think someone may have spoken about this yesterday, so I'm not taking credit for this. But so you can see, basically, every time we've had gold after it's up 9 weeks in a row, there's been one day after which was in 1980, where it's been bullish. Every single other occurrence has led to some sort of downside. The only sort of reasonable downside as well, or small downside, was in 1970. 2 months later, it was sort of 2.47. In 1980, it was 32.2% down. 2006, it was 10.3% down. And in 2020, it was 7.27% down. So I've marked them up here. Unfortunately, my chart doesn't go all the way back to sort of the 1900s, let's say. But the most, or the furthest one away I can find is this 2006, where you've got a 35.5% rise, followed by almost a 25% drop. Same thing all the way over here. Let me find it again. In 2020, obviously, we had COVID, a 9-week bullish candle print. We did have a doji there, but I think this is being considered bullish in the data collections I've found, followed by a 18.3% sell-off. And then if we just look at gold now, this to me, I've been saying this for maybe a week or so, but it's just such a big red flag that we've basically had no pullback. The most we've had really was higher time frame consolidation. There's been absolutely no mean reversion, no pullback, very little profit taking as well. Obviously, we've seen profit taking on sort of smaller time frames like the H1 and H4, where it has provided dips, but major profit taking from all of this buying just hasn't occurred really. So to me, it's looking like something maybe like this, where we pull back into sort of the moving average fan over the next couple of weeks. Sorry, not over the next couple of weeks, for a couple of weeks, where we revert and then continue higher. Now, I was looking at a it might have been JP Morgan or Bank of America. It's one of those two. I can't remember which. They expect gold to start coming down. I think it's Q2 2026, basically once the Fed's done with their rate cutting cycle. However, I don't know. I think it might be sooner than that, but we'll see. I don't know. I'm not here to try and predict the top of gold. I think that's a bit of a silly game to play. So I'm not selling. I'm not buying. I'm just watching for now. I'm not even sure if I'd buy the pullback, to be honest, because I think if gold does pull back, I think it's going to be a bit more severe than just a pullback to like the H4 200. I actually might start selling if we can see a clear bearish direction. Now, on the other hand, what we could also watch for, if you want, again, I'm not saying to do this, and this isn't what I'm doing, but this is something that's you could think about or keep in mind. Again, we are on the 9th week. Typically, on the 10th week, we will see some sort of wick to the upside, which is very normal, maybe an equal high or slightly lower high, and then that's when we start moving down. So if we see next week, if we see next week, we can't manage to break this week's high, and we start seeing pressure to the downside, that could be a very early sign that gold is going to come much lower. Now, again, I just want to clarify, I'm not doing that. I'm not selling. I'm just waiting and just relaxing and watching. But I think it's interesting, you know, even if you don't trade these things, it's good to be in the loop in the markets. James, late hour cigar when you go out tonight? Yeah, I do have some cigars actually in stock. I might do. Use fixed range volume profile is a better fib. I'm struggling to figure out how to use it properly though. I don't know. I don't use a fixed range volume profile. Never have. I think I did look into it, but I didn't find anything about it that really made me want to use it. It seemed a little bit random. And again, I didn't do too much research. I've never used it, so maybe I just did it wrong. But it seemed like maybe it will come to the power of control or point of control, whatever it's called, and then maybe it won't. It wasn't like I didn't find anything that was worth paying much attention to. How does volatility from month on month, quarter on quarter data compare to year on year? Do you mean the VIX? I'll be honest, I don't have that data on me right now, but we could have a look at the chart if that's really what you want to do, because I don't really have that much going on. As I said, I'm taking it quite easy today. What about silver? Silver is kind of the same thing. I don't really think there's the same stats on silver in terms of the weekly candle formations or prints, but I think the same principle applies, really. I think we've had a very, very strong run on silver. We've broken all of the major levels with pretty much no problem. We've had 40, 42, 44. We've had 50. We've just approached 55. I think we probably will touch 55 again at some point, or we will make it to 55 at some point. But overall, there's no way I'm buying gold or silver at this point. I think, to be honest, if you are buying it, and I'm not talking about scalpers and intraday positions, but if you're looking to swing trade now, I think you've already missed the move. And I think you're more trading from a place of FOMO and greed, because again, it might look good on the H1 or the H4, but if we just pull out to the weekly or monthly, this is a big problem in my view. I mean, we are 110% looking at a mean reversion market, or a market that is ready to have a mean reversion. But when is that going to happen is the big question. No idea. I don't think anyone can really put a time on it, but all I know is I don't want to be stuck in the market when that does happen. I want to stay kind of neutral, because although, yes, I am actually bullish on gold, when it does start pulling back, I wouldn't be opposed to being a seller. So I don't want to get stuck in buys and stuck in a mindset of buying all the pullbacks on gold, when actually all I'm doing is buying lows on a downtrend. Does that make sense? So, right, I'm just having a quick think. I don't know really what else is going on. Oh, let's get rid of that. Hold on. So dollar CAD is still bullish. I don't think there's an entry on dollar CAD though. I did check it earlier. Yeah, it's just sideways. So it wouldn't surprise me on dollar CAD if we basically just see what we've already seen, which is the consolidation periods here, and then just another move up. It would, I mean, I hope we don't get that, but that is sort of just the behavior this market's displaying right now. I would love to see some sort of pullback into the previous lows around here, meet the 200 moving average, and then continue higher. That would provide me with an entry point. But then we've also got to consider, is the dollar going to continue lower? So I was sat here for the past week basically saying that 99.5 to 100 is kind of where I would expect sellers to step in, which is what's happened. So I did manage to call that quite well. However, it doesn't really matter because I did lose money on my euro dollar shorts. So not ideal. I called it, but failed it at the same time. Typical. So yeah, pound CAD is a big maybe. I would need to see something really convincing on pound CAD to make me enter. I think the break and retest and the edge finder are very convincing, but I just don't see really any other technical reasons for me to be in just yet. We do have quite a nice trend, higher low, break and retest, but that's not really my style alone. Dollar Swiss is seeing a little bit of a pullback. So if you are a bull on dollar Swiss, never mind. Dollar Swiss has lost its rating. Dollar Swiss was actually one of the most bullish ratings on the edge finder, but it seems to have disappeared. So I'm actually just going to scrap that completely and move my focus away. It seems like the indices are moving quite well, but still not managed to correct the downside that we've had so far today. But the fact that we have come down on all the markets, so the S&P, the Dow, and the NASDAQ, come down to retest these lows. And we've seen buyers very clearly step in, take control again, does tell me that there is very clearly still buying interest in the market, but whether it can be sustained, we'll see. Swiss is strong now. Yeah, it does appear to be, but it doesn't make me want to be a buyer, to be honest with you. Seems like nat gas is having a little turnaround today as well. However, I'm still not really wanting to be a buyer just yet. So again, just sat on the sidelines there. Platinum's having a pullback. I think platinum could also maybe be a good buy along with the other metals like gold and silver, but I don't really know that much about platinum. So yeah, my focus is on gold and silver. So pound CAD, dollar yen. So dollar yen could maybe be an option to buy. I'm not going to. Again, I just want to be very clear. I'm not really doing anything today. Just sort of thinking out loud. But we do have quite a nice level through here. So we didn't manage to fill the gap, but we did come down to the top of the gap, retested this high. We've come into the fib level. We are in a bullish trend. Technically speaking, or from a technical standpoint, this trade does look pretty good. But again, it depends where you stand on the dollar. Are you bull? Are you a bear? What do you think of the yen? In my opinion, there not really enough in this market for me to be either way. I'm cooked to bought silver yesterday. Yeah, this is the problem. I think, in fact, I don't have the video, which is unfortunate, but there was a video I saw on Instagram. I sent it to sent it to my team, and I didn't say anything. I just sent the video and put sell, and it was a picture from lots of different what do you call them, like pawn shops and gold. I don't know what they're actually called. Anyway, shops that sell gold. There was queues outside the doors. I mean, it could have been just cherry picked pictures. I'm not really sure, but it was funny anyway. But anyway, what I'm trying to say is that over the past couple of weeks, my entire Twitter timeline has been filled with people talking about gold and silver. Then I see that post about people queuing up outside to buy gold and silver. We're at extreme levels relative to indicators like the moving averages, Bollinger Bands, etc. It's just, to me, it seems like we're in that final phase. When we've got like mass optimism, mass hope, we've got the sort of the stock market's just rallying essentially, and then we see your grandma might text you or your mum might text you saying, is now a good time to buy the S&P? Or she texts you saying, I've just bought Bitcoin. That's always an indicator to either reduce your risk or just get out of the markets because it's going to go down. So that's that's my perspective at the minute. And I'm willing to say I could be completely wrong, and I could be sat here in a month's time saying, actually, I should have bought this dip because now silver's at $60. But as traders, capital preservation is the number one rule. Then it goes to capital growth. And in this case, I think capital preservation is what is coming to play in my trading book anyway. Pound Aussie. Yeah, we can go into Pound Aussie in a second. You think you saw the same reel at the bar? Yeah, I can't remember. It was like it's from an account, actually. It's quite a good account. I'm not going to say the name. I can't remember it, but it's like a trader's account. It's like a real, not like a social media trader thing. It's like for traders information. But yeah, it was just a carousel of images of people just queuing up to buy gold. And I was like, oh my God. Yeah, it's not time for me to be a buyer. So the reels, I think it's Sydney, Australia. Yeah, I think there is one in Sydney that I saw. The one I'm talking about specifically was in America, though. As a day trader yesterday, I closed silver trade at 53.5. What was that? 53. It's a pretty good exit, I'd say. Well, either way, you got out before the downside today, so good job. I mean, yeah, it's a bit of a rough day in the markets, to be honest. I mean, unless you were counter trend trading. So for example, when the dollar's been doing quite well here and you've been selling this move, I think that's kind of the only situation you've done well, because obviously if you've been selling gold and silver, first of all, either you know something I don't, or you're very, very aggressive to the point of gambling. And again, I'm talking very, very broadly here. Some people may have crazy strategies that I'm just not informed about. But generally speaking, I don't think that today has been a good market for the majority of people. I think most people are long on precious metals. I think a majority of people are long on things like the S&P, the NASDAQ. And I think a lot of retail as well, me included, were long on the dollar. And all of those things took a turn today. So it's just one of those days where if you are sat watching this stream and you're down on the day, don't worry. Even if you're down on the week, don't worry. I am as well. It's one of those things. So I don't think I had a point to what I was actually saying there, but anyway, Bitcoin is taking a bit of a dump today. I don't really have a standpoint on Bitcoin. I never really do. I more just use Bitcoin as like a technical idea. Sometimes I'll have a look and see what I think will happen, but I never really trade. In fact, I don't trade it at all. So far, what I've been saying has been relatively accurate, but again, it was just from a technical view. So we have had the break. So maybe if we could get some sort of retest here into these moving averages, it might be an opportunity to sell Bitcoin. But again, Bitcoin's not my bread and butter. I don't really know what I'm talking about when it comes to that market. So don't take that as gospel. New Zealand US dollar, I'm fairly sure it's an entry. It's pretty much an entry. Nothing going on here. I might cut the position tonight. I don't know. It depends. I'm not really too bothered. It's a small position. It was a DCA attempt. And the fact that the dollar has rejected this sort of 99.5 level twice is a bit of a red flag to me. So yeah, we'll see. I'm just going to monitor it closely today. I might cut it and reposition next week. I know it's not super professional. You should always have a plan for a trade, but again, because it's such a small trade, such a small position, I'm not really that concerned, because the original plan was to keep scaling in. But yeah, considering that I've already taken a couple of losses today, I'm happy to be a bit more conservative and just cut it. Assets down, Swiss up. Why am I not surprised? Yeah, I mean, it is what it is. I don't think it's any cause for concern. I wouldn't say that there's any real shift going on just yet, but again, we'll just have to see. But yeah, there's not really anything going on in terms of setups or edge finder readings right now. In my opinion, there's nothing that I'm eager to show you. There's no setups on my watch list. I'm a little bit upset about dollar yen, because this is probably the only setup that I actually do really like, technically speaking, that I'm not going to take, because again, we've got a really nice fib pullback into a 200 moving average. We've got a pretty nice break and retest, but again, just the intervention risks. We've still got this open gap, and the dollar has very clearly had some selling pressure. I'm just not. I don't have the cojones to really take that risk right now. It might work out, to be honest. I don't know. We'll see. Again, I'm not doing anything. Just observing for today. Let's see. Is there anything else we could take a look at? CM50, Japanese, Nasdaq, UK. Yeah, even the European markets took a hit today as well. I don't think there was any real news, was there? I'm fairly sure there wasn't a big news release or anything in the markets. But I'll be honest, I'm actually not 100% sure if it's just a Friday profit taking and it's just that's what it is. There's nothing really going on, or if I have missed a real headline. But I don't think that is the case, because I'm fairly sure you guys would have told me about it by now if I was skipping over something. But yeah, so UK 100, which is the FTSE, obviously took a hit and is having a pretty nice comeback now. The DAX is in a very similar position. DAX longs actually looked quite good again on this sort of break and retest pattern. Not for me, I'm not going to take that, but I quite like the concept there. No big news. Yeah, I was talking to my team yesterday, and it doesn't really seem like there's anything going on. Obviously, we had Trump talk to Powell, say it was a constructive or a what was it? Yeah, I think he said a constructive conversation or something along those lines. We have some fears about regional banking, but yeah, there's nothing major going on. We've got the fear and greed index on CNN also. Let me just double check that. CNN fear greed index, because that's it was actually on extreme fear. I think yesterday it's gone down to fear. And this is obviously typically known as like the contrarian signal. So when we have extreme fear, generally you would actually want to be greedy. When we've got extreme greed, you'd want to be fearful. So in extreme fear, you'd really want to be a buyer. In extreme greed, you'd want to be a seller. Of course, that's not a blanket rule. That's just generally how you look at common consensus between sort of retail and public. So that's interesting. It does make me want to sort of hold the S&P. It makes me a bit more bullish on the asset. I'm fairly sure Chris and Nick were looking at the same thing yesterday. I can't remember exactly what it was, but I think to the people that quite like contrarian positioning, long on the indices markets, it still makes quite a lot of sense. Watch pound dollar, it's melting. Yeah, that's really frustrating. I mean, I was taken out by like what, a couple of pips, and then going back down to entry. This is where, you know, you get those feelings of a little bit of frustration, a little bit of FOMO, a little bit of greed, but there's nothing I can do here. I might just call it a day after the stream and go and cry in a corner somewhere. 6587. I'm going to be honest. I'm not even going to try and attempt to say a name. I'm not very good at reading and pronouncing names. But hello, I'm good. Thank you very much. How are you? I've got about a minute left on this stream, and then I'm fairly sure it's Marco coming to take over. Let me just see. Yes, you got Marco coming to take over. Pound dollar. Yeah, I mean we're on pound dollar. I just don't think. No, okay. So just while we have this last minute, I'm going to give you why I'm completely sat on the sidelines now. I took I took 2 attempts to go short on Eurodollar. One worked out, one was stopped out. Now, the fact that we've got still trade tensions. I mean, it's not seeming like any massive deal just yet, but we do obviously still have the US-China sort of slight concerns. We've got no data out of the US still. We've still got that government shutdown. We've still got the Fed expected to cut through 2025 into 2026. The dollar reached sort of 90, in fact, was it almost perfectly 99.5 and rejected. And this is exactly the area I was looking at for sellers to step in, which they did. So now what I need to see on the dollar, again, because we've got very limited data, I can only really take a sort of a basic approach. So this low here could get retested and come lower, or we could come back up, break these highs, retest, and then go higher. Now, of course, I'm just saying it could go up or down, which doesn't give you guys much insight, but that's what I need to see in order for me to start building a bit more of a directional bias, because right now we've broken previous lows. It looks like we're coming up to now create a lower high, and we're just going to continue lower. This looks like the start of a new downtrend, but obviously that doesn't actually mean that's what's going to happen. So with pound dollar, the technicals here are very bearish in my opinion. We've come up to 200. We've failed multiple times to break higher. We've failed to create a new high, and it looks like we want to come down into this low, create a double bottom, but you know, again, there's only so much I can say right now, because again, as an interest rates trader, I rely very heavily on inflation and labor market data, specifically from the US, so I can start pivoting around what the Fed might be doing, what their focus is, what they're saying. And obviously I can't really do that right now. So I'm just kind of going off smaller things, which I think is what the market's doing. You know, again, we've got the government shutdown. So it's by the looks of the stock market, specifically the S&P, NASDAQ, and Dow, it seems like no news is good news. We just keep buying until we've got a reason not to. But yeah, anyway, guys, my time is up. Thank you very much for being here and being so cool. Guys, have a great weekend. Enjoy the rest of your Fridays. I'll speak to you all very soon. Don't leave. We've got Marco coming on the show next. So yeah, stay safe. Don't get margin called, and I'll see you next week.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Welcome to my segment of the stream. I hope you're doing well. It's Friday, end of the week, so we're winding down, at least here in Europe. I'm guessing the guys in the United States are still pretty active. I'm looking at USD CAD. I'm looking to buy the dollar in general. I think the dollar is pretty high probability to continue going to the upside. We can quickly start off with that. So checking out the DXY. We have had quite a sell-off lately on the dollar, but now I think it's time for us to continue going to the upside. I think we can also hit this level of resistance, so I think that is achievable. One of the reasons why I think that could happen is you have to think about the Fed. So if you have been following my streams, you would know I talk about narratives, okay? So in Q1 and Q2 of 2025, the narrative was Trump, tariffs, new policies, new economy, closing down the United States for trade, okay? The narrative has shifted. Now we're watching what will the Fed do. That is now in the spotlight. That is what moves the market. So what do we have now? We have a US government shutdown. We have no news releases. We have 2 rate cuts priced in. And pretty much the Fed is not going to get more dovish. So Fed is like 100% dovish. So I don't think they plan on doing 50 basis point cuts. I think the best that they will do and that they can do is 25 basis points in October and 25 basis points in December. So rate cuts are now fully priced in. But there is no new data. We have CPI coming, I think it's next week. Dollar CPI, yeah. So on the 24th of October, next week, we have CPI incoming, which, if it prints hot, it may force the Fed to reconsider their position. So the summary is, there is a lot of things that can go wrong in terms of the data. We can have a great CPI, hot CPI. We can have a great NFP. We can have some lagging data that is better than expected. So there's a lot of options that can go wrong for the Fed not to cut, but there is very little that can happen that would make the Fed be more aggressive, if that makes sense. Okay, so basically, I think this is a good opportunity. I think if there's any sort of news that CPI is hotter, NFP is better than expected, the dollar just goes to the upside, right? And that's how you have to think about trading, or at least this particular trading edge. You have to look at the numbers. You have to ask yourself, well, what is priced in? And what happens if we get an unexpected number, right? If everyone is expecting 2 rate cuts, if everyone has already priced in 2 rate cuts, then you need just a very tiny piece of information to get these markets moving in the opposite direction. Another reason why I'm bullish for the dollar is months, like ending of the month, ending of the corporate month. Usually at the end of the month, you will get dollar buying, okay? And you can do some very fast research. Open your ChatGPT, tell ChatGPT to analyze the last 7 days of every single month in the last 20 years and ask ChatGPT, is the DXY up in those last 7 days, or is it down? Well, you will see that the statistics tell you 55% of the time, the DXY actually gains value in the last 7 days of the month. 45% of the time, the DXY is lower in those last 7 days of the month. What is happening? Well, basically, big corporations, Apple, Amazon, Microsoft, Nvidia, they all sell stuff worldwide. So they get many different currencies. They get euros, pounds, yen, Aussie dollar, New Zealand dollar, so Chinese yuan. And at the end of the month, they need to exchange all of the foreign currency for the dollars, for US dollars. So how can you exchange foreign currency? Well, you have to buy US dollars. That is an effect that you can spot both in the price and in just general like scenario building, okay? So take a look at the Edge Finder. Take a look at the US. Pretty healthy, right? I mean, it's not the best, but with the numbers that we have, these are not the fresh numbers, but with the numbers we have, it looks okay. It looks strong relative to other currencies. And that's all you need to know. How is the US doing relative to other currencies? Okay. So I also wanted to show you one more thing. I wanted to show you the power of AI. Here are some housing prices that I created. Okay. And basically what this tells you, housing prices are a great confluence to buy or sell a specific currency. They are a great, let's say, thermometer to see how a specific economy is doing. If house prices are falling, usually the underlying currency will fall as well. Well, look at the UK falling housing data. This is the last 30 years. We want to sell the pound, and the other data is telling us the same thing. New Zealand dollar. I told you on the last video, I was bearish on the New Zealand dollar. Australia, right? Downtrend. While you have Japan, constant uptrend. EU constant uptrend. United States constant uptrend. We had a 2008 crash, of course, right? And in the EU, but now we're in an uptrend. And we have Canada, which is currently in a downtrend. So basically, this tells you sell the CAD, buy the dollar, buy the euro, buy JPY, sell Aussie, sell the New Zealand, sell the GBP, and yeah, that's about it. I did this in like 10 minutes. So this software, ChatGPT or any other AI software, makes it so freaking easy to do research, to build a trading edge, and you can have access to data that would otherwise cost, I think Bloomberg Terminal is like $30,000 per month, I think, or no, sorry, per year. But anyways, you now have the Edge Finder. I talked to Nick. He will also look into implementing housing prices into the Edge Finder. And basically, you have like a Bloomberg terminal for a fraction of the cost. If you want to get the Edge Finder, link is in the description of the stream. You can use my discount code, which is MARKO. Okay. So trust me, professional traders have been using Bloomberg as their main trading edge for years, for decades. Now the playing field has leveled out a bit because the retail has gotten access to tools like the Edge Finder. Like retail traders don't have $30,000 to buy a Bloomberg terminal for 1 year. I don't have $30K to spend on a Bloomberg terminal. I would much rather buy a BMW or some other fancy car. So yeah, just wanted to briefly comment on that. Using Edge Finder, using ChatGPT, you can pretty much get your hands on any piece of number or information or trend or graph that you want or need. So, Bullet says, hi, Nick. Hello, Mr. Bullet. I'm not Nick, but I appreciate the warm welcome. Sluggy, what's up? Max, what's up? Subi, what's up? The best A1 host. Thank you very much, Joshua. And thank you guys for jumping on my stream yesterday. We had a lot of fun. Sluggy says, took a small loss on GBP Swiss longs, although NZD/USD performing solid. Let's check it out. We looked at GBP Swiss yesterday. Let's see what happened. My trading view is a bit slow. Okay, so we actually pierced the lower level of support. Interesting. I didn't expect this would happen, if I'm being honest. I would have expected this to be a nice, strong level of support. But hey, that's why you hedge. And you mentioned NZD/USD is performing nicely. So it definitely looks pretty healthy. So let me move my alert a bit lower. I'm considering some sell setups on NZD/USD. Let me also check out the top setups. NZD/USD. Neutral reading so far, but I do want to sell the New Zealand dollar. I do want to buy the US dollar. So I think this position is pretty nice, pretty healthy. I believe Sluggy is in from this level. So yeah, pretty nice reward to risk so far. Housing market analysis was solid. Thank you very much. It is one of the confluences that I personally look at to execute trades. So for example, I want to sell the CAD. I want to sell the GBP. Housing prices, I want to sell the New Zealand dollar. See? So housing prices don't lie. They definitely show you something is wrong with the economy. And if the economy is not doing well, if there is less demand for housing, there will be less demand for the underlying currency. That's just the way the markets work. It's all connected. Are we expecting a hot CPI print? I think we are actually a bit hotter print. So I've been following Brent Donnelly, and there is still one parameter that did get released, and it gives you the inflation. So just give me 1 second. I'm going to try to find it. I can't show you here on the screen because it's a paid service, and I don't really want to show it. Let me see. So he compared inflation with something else. Okay, we're trying to load here. It's not loading. We'll let it load in my email. But essentially, we are expecting a bit of a hotter inflation print. Gold is going stupid. Well, finally, maybe time for damn, okay. Haha. I'm sorry if anyone is long, but in my mind, I'm like, finally, it's going down, because it has been super tough to watch it melt up. I told you last week, I saw gold in the news. They were talking about how it went from 3K to 4K. When something hits the mainstream media, that pretty much means the uptrend, the explosion, the frenzy, the massive buying is close to being done. If everyone knows about something, that means it's going to go down, because most of the buyers have made their decision if they want to buy or sell, right? Silver down as well, down minus 4.5% and crashing. Okay, pretty interesting. Let me see if my thing loaded here. It did. Okay, so if you want to check out the alternative to the US CPI, it is ISM prices paid. Okay, ISM prices paid. That measures inflation, and it can sometimes foreshadow the CPI. So ISM services, check it out. Apparently, they're still being released, even during the shutdown. So because we're expecting a higher inflation print, and if we do get a higher inflation print, a higher CPI, what do you think will happen to the pricing of rate cuts? Well, most likely there will be a repricing, right? So people will maybe no longer expect a 25 basis point cut. So we may get fewer rate cuts. In the end, it will be a dovish move, and dollar should appreciate on a hot CPI print. And I think it could appreciate a lot. The reason is there's a lot of people going short. Okay, there's a lot of people going short. It's kind of a one-sided trade. A lot of people don't like the dollar right now, and I think it's going to take a very little amount of data or sentiment to push this price higher. So I just think the path of least resistance right now for the DXY is this. At least to the swing high. I think we can do that. Okay. Let's see. UJ buy or sell. 30K is wild. 30K is nuts. But if you're a big institution, if you're a prop firm like SMB Capital, you can afford it. Okay. And I think they get multiple licenses with one payment. For 30K, you can get a really nice jet ski. I think you can. Yeah. Maybe one of those turbocharged jet skis. 30K on black. Yeah. You can put it on black and avoid trading at all. So either you will be kind of rich or super poor. Today was amazing, from $100 to $700. What a day. Congratulations, Youssef. Great achievement. I'm hoping you applied good risk management. Okay. I'm just hoping you applied good risk management. If you risked $100, I think that's probably okay risk management, and you caught a nice reward to risk. So congrats. You sold gold. Well, that's great if you do have a profitable long-term trading edge. For me personally, I think selling gold is a bit of a suicide mission, because that's just what I'm seeing online, just what I'm seeing when talking to other traders, when reading about other traders, when reading through market wizards. You know, going short on a massive uptrend, massive explosion like this is where people lose most of their money. So if you do have a specific trading edge and you know what you're doing, you have strict risk management, go ahead. But if you're not sure exactly what you're doing, lucky streaks always have an ending, and the ending is you lose all your profits and then some. That's why very simple strategies like ICT, they work for a couple of months, and you do make money for a couple of months. Then the market conditions shift. You go from an uptrend to a downtrend or to a flat range bound market, and you lose all of your profits. So you're basically a break-even trader. But it's not even break-even, because you're still paying swaps and commissions and fees. I'm short NASDAQ, 24851. So again, I wouldn't go short on the Nasdaq. Definitely something I'm not interested in doing. Nice recovery today on the Nasdaq. 24851. Okay. Yeah, I would just be looking for buy setups. I mean, I'm hoping for a pullback. I would like to see a pullback. I want to buy the Nasdaq. I want to buy gold. I want to buy silver. I'm definitely not looking to sell it. Amin Marco took the shot today as it was looking interesting. Okay, so Max is probably selling gold. So congratulations to all the gold sellers. Again, I personally cannot comment on it because it's just not something that's for me. I think it's just too scary. And yeah, you really need to have a good trading edge. Sluggy says, finally gold dropping. I'm happy as well. We may finally get a pullback. I saw the double top 15 minutes and said this might be the top, and it was. Okay. Sure, Max, I'll look into the Discord after the stream. DXY fib retracement looks solid on the daily, looks good for longs. I mean, I'm not even looking at technical analysis. I'm just looking at fundamentals. I'm just building a story, assembling all of the pieces. But technicals do look good. I think they look pretty healthy. TradingView is super slow today. What the hell is this? I get these days when TradingView just lags and cannot load anything. So can we see the Nasdaq back to 2490? You can, for sure. It can happen. It's gonna happen. I mean, that's what history tells us. The Nasdaq just keeps on grinding higher. So it's gonna happen. When is it gonna happen? No one knows. You can just position yourself to expect higher moves, and that's why you have a massive trading edge. That's why you have a massive trading edge if you just buy the Nasdaq as it keeps going up. I tried martingale on a stake with fake money. It wasn't that bad. Not financial advice. Issue with martingale is that at some point it would fail and lose everything unless you regularly take it out. Yeah, it's the trading edge is what actually matters. Risk management, there is no real trading edge behind risk management. So martingale is a way to manage risk, and it may work for a while, but eventually it will blow up. Just blew my $100 account. Well, I would highly recommend, if you have another $100, I would pay for some education. Okay, I wouldn't trade with $100. It's just too little to do proper risk management, and you'll keep blowing the account. So take that 100, put it into a quality education. What you can consider is joining the A1 Discord, where you get education, trade signals, trade breakdowns, fundamental events breakdowns, interaction with successful traders, all part of the Discord. So if you do want to join, you can use my discount code, which is MARKO. That's a great option for education. Okay. That's also why it's not a possible practice to prop firm. I put 100 in Plinko and now I'm a multi-millionaire. I'm not sure what that is. How much more of a drop of gold would you like to see before you go back in? That's a good question. That's a good question because looks like we finally started to get our pullback. I would say I have some levels, and I'm not looking to buy all of it or go full risk on one position. I'm looking to possibly scale into it with multiple entry points. So I think a good first level would be maybe this area of support, or right here, or possibly a bit lower, right there. These are kind of the levels I'm looking at, right? So let's say take 25, 0.25, 0.25, 0.25, just to stack some positions with tight risk management. If all three lose, it's no biggie. It's under 1%. But let's say the second one goes up back to the highs. That's already quite a healthy reward to risk, right? So you can catch a really nice winner. And I do think once we do get a pullback, we will go back to the all-time highs. You know, eventually we will grind back to the all-time highs. So it may not be a straight shot like this, but I think eventually we will get back to the ATH. When TradingView lags, it usually means a big reversal. Okay, I'll keep that in mind. FR, you can get a really nice cigar for $100. Probably better than putting it in a trading account. What is your opinion on hedging? I think if you have a good reason to hedge, I think if you're proficient in hedging, then it is good, but you have to watch out for hedging not to, let's say, destroy your trading edge. Because if you're bullish the USD CAD for reasons, and then you want to, let's say, hedge USD CAD because you wanna let's say sell Euro CAD to hedge against the CAD because it seems like another good trade idea, well, you have to be careful. Your initial proposition was that the US dollar is strong and the CAD is weak. So why would you go ahead and buy Euro CAD or sell Euro CAD, right? So for me, hedging can get very complicated. I just like to keep things simple. If I have a clear bias on something, I'm gonna execute a trade according to that bias, right? So I don't like to if I'm bearish on the CAD, I don't like to buy it just to be hedged in the markets. So for me, it's not for me, but of course some traders, they like it and they find a lot of value in hedging. They're proficient in hedging. So yeah, you can do all sorts of things. Just depends on what works for you. Marco, I heard you'll be doing a webinar session with the boys. Looking forward to join. Yep. So I think it's in November. It'll be Nick, Chris Pulver, and me. We're gonna do trade ideas for the end of 25, beginning of 26. Information will be posted, I think, on Trader Nick's channel, of course, in the A1 Discord. So make sure you guys join. I think it will be either free or for the A1 trading members. Marco, do you know Deep Prop from EU Funded? No, never heard of them. And this is a good time for me to talk about the sponsor of today's video, which is DNA Funded. So if you're looking to expand your trading capital, you can get 25% off any of the challenges from DNA Funded. The discount code is A1 Live. So this is for you guys watching the streams now live. 25%. So make sure you use it if you want to expand your trading capital. I do have a 50K challenge running. It is down minus 2.5% currently. This is the equity. I'm battling it out. This is for my series of trading with ChatGPT trade signals. So we had some drawdown, we had some profits. Now we're around break even. It's a mess. So I'm trying to battle it out. I'm trying to get through this break-even period because in the first 3 months of testing, ChatGPT made like plus 22% with minimal drawdowns. So I'm looking to get back into that sort of a period. If you want to check it out, this is a good prop firm. This is a reliable prop firm. You get a really competitive price with our discount code. Again, as I mentioned, A1 Live. Okay, 25% off any of the challenges. Not sure if you already went through this pair, but can you please look at USD Swiss? Okay, sure, USD CHF. Let me just also see with the live stream schedule. This is a good thing to look at if you're wondering when I will be streaming or when Nick will be streaming. So I'm the last guy for today. Okay. So USD Swiss. The problem for me is I haven't done a lot of research for the Swiss. Am I looking to research the Swiss? No, if I'm being honest. I think I have a clear bias on some other things. So on the Swiss, I don't think there's a massive trading edge. There is some talk of an intervention, if I'm not mistaken. So I'm going to have to look into that. But this is flat. We can check out the edge finder. It's the CHF. Neutral reading on the edge finder. just looks flat. I would paint a support level, resistance level. We're stuck in the range. Until we break one of the key levels, I don't have a massive trading edge on USD Swiss. I am bullish on the dollar, but I would rather express that view through buying USD CAD, which I do have a buy limit set. So if you guys are in the A1 Discord, I do have a buy limit. This is a trade signal in the A1 Discord. I love this pair. I think it's great. Positive swaps. So if you go to the carry trade scanner, USD CAD, see positive swaps. USD is, I think, one of the strongest currencies relative to the other ones. CAD is a weak currency. I think the weakest currency. But I also like NZD USD, which Sluggy is in, I believe. So I'm considering maybe selling NZD USD. I'm trying to get into some USD longs overall. Alert is set. We're definitely in a downtrend. So clear downtrend. And I think it should be positive swaps. It should be positive. Let me check. Yeah, positive swaps if you're selling. Carry direction is a sell. So if you do want to do something with the dollar, I think NZD USD, USD CAD are better options. Okay, look them up. They're really good. I will take a look. But there's so many prop firms. 95, maybe 98% of them are here for a couple of months. They take your money and then they run away. So you have to be really, really careful. You have to be extremely picky when you're looking at a prop firm. The first thing when you're looking at a prop firm, you have to see who is running it. Is it a serious business? Okay, do they offer crazy discounts? Do they offer 70% discounts? Do they offer extremely low pricing? That is all a big warning sign. So the space is not regulated. It's super new. It's like brokers back in 2000 and something. And you have to be really careful because it's real money. You know, it's your money. It's real money. So check out the Trustpilot reviews. Check out what people are saying online. Look at the FAQs. See if there are any hidden rules. See what basically other people are saying about a specific prop firm. I have been profitable so far longing the NASDAQ. Even if there is a panic sell, I'm happy with hedging the other way. Would you say this is a sustainable trading strategy? Absolutely. Yeah. I mean, for my investments, I do exactly that. The key is I wait for a drop. So I wait for a pullback. Nick does the same thing. Chris Pulver does the same thing. James probably does the same thing. So when Trump crashed the markets, we were all buying. Okay. If we get this happen again, I'll be a buyer. Or you can just dollar cost average into the NASDAQ every month. Okay. So there's a lot of things you can do. As long as you're buying and holding, you're going to make money. Okay. Nick is nuts for being long the QQQ. So that is the NASDAQ, if I'm not mistaken. I would say it's a very solid trade idea. I would say that's the taco trade. And I would say the probabilities are that the NASDAQ will actually go back to the initial level. Probabilities are very high. So Trump makes a crazy tweet. You buy the dip. A couple of days later, Trump walks back on his word, completely switches his mind, and the price goes back to the level before the sell-off. That's the Trump trade. That's the taco trade. And there's a solid trading edge behind it. Trading is so slow at the moment. It is. Please do Aussie NZD. I'm in a sell there. Just trust me on this one with you funded. Trust me, bro. Have you heard of Apex? Yeah, but I'm not familiar with them. I don't know much about them. I'm late to the stream. What are your thoughts on gold? Since you're bullish on the US dollar, could this be a time for pullbacks on gold? I think it could be the time for gold to finally pull back. I think this current candle is pretty big. It's pretty large. It is Friday, so the selling probably will die down through the weekend. So I'm not sure what will happen. No one knows what will happen. So no one has a crystal ball. I can just tell you my game plan. My game plan is I'm looking at levels and I'm looking to get in. I'm looking to buy it on pullbacks. That's the plan. When will a pullback happen? I have no idea. And okay, the last one will be Aussie NZD. The last one for today, before I let you go to celebrate the end of the week, we will do Aussie NZD. It's in a clear uptrend. Aussie, last numbers we got from Australia were not so great. Okay, the last numbers. Do you have a ponytail? Yes, I do. It's hidden behind here. You can't see it. It's super long. It's like 1.5 meters. Okay, so Australia, yeah, last numbers 16 of, what is that? September. Or is it? No, it's not. It's October. Yeah, kind of bad numbers, unemployment. Okay, bearish for the Aussie. So I'm not sure about the most recent data. I was bullish on the Aussie. The housing market is not so great in Australia. The New Zealand, I'm definitely bearish on. So the New Zealand is, no, I don't have a ponytail. I'm kidding. So I don't have it. Sorry. See, there's nothing. Anyway, New Zealand dollar is more bearish. So that kind of explains the uptrend. I personally think that there's not a massive trading edge behind Aussie NZD. I think there's better opportunities out there. So if I had to give you a direction, it would be to buy, okay? And I would be looking for pullbacks, which you have right now. This is a pullback. We're close to the 20 MA. So if you want to take a stab at it, you can, if it fits your trading plan. I personally am staying out of this one. And that's about it. So quick summary before I let you go. The NASDAQ, I want to buy it. I'm looking for pullbacks. Gold, same thing. Silver, same thing. USD CAD, I have a buy limit set. Euro CAD, I'm in. So Euro CAD is an active trade. I'm sorry, TradingView is super slow, so you're not going to see any of the charts that I just told you about. Maybe you can see them on Monday. You can catch me on Monday. I will be live streaming every single day. Thank you very much for watching. Check out DNA Funded, 25% off. A1 Live is the code. And have a great weekend. Relax, enjoy it, do some research a new trading edge, be prepared for Monday. See you.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.